Do you use credit to help finance your business? If so, then you might be wondering, what are the tax implications of business credit are? Guys, in this video, I'm gonna break everything that you need to know about taxes as they pertain to business credit. So here's what I want you to do. Make sure you stay all the way until the end of this video because making mistakes when it comes to taxes and business credit can be very costly for your business. Without further ado, let's dive in. All right, guys, the first thing we need to discuss is business credit versus income. Although business credit might feel like income since obtaining it can lead to more money, it is not actually business income. Therefore, it is not subject to taxation the same way that business income is. So for example, let's say that you obtain a business loan for $100,000 for your business from a bank. When the funds appear in your business's bank account, the IRS does not treat this as if your business has just generated $100,000 in revenue. So generally speaking, business credit is non-taxable income. However, if your business did a large sale and received $100,000 as a result, obviously this would be considered income and you would be subject to taxes. So regardless of whether you obtain business credit through a business loan, a business credit card, or through some other means, it is not considered taxable income. Now, speaking of credit, there is an incredibly handy financial platform that I want you to be aware of called Smart Credit. It's a simple all-in-one application that has a variety of useful tools that can really help you maximize your credit score significantly if you're trying to build it. For example, it has three primary features. There's a score tracker, a score builder, and a score boost. With the score tracker, it lets you see all of your different types of credit scores and how they are progressing. And it also will show you how your scores change over time to get a better understanding of your current credit situation. With the score builder feature, this deals with your payment history, which is about 35% of your credit score. Through here, you can communicate directly with your creditors and financial institutions to address errors, ID fraud, and much more. You don't have to mail any letters or get on the phone with anyone. Just a few clicks of the button and they do it all for you. But finally, I want to talk to you about Score Boost. This helps you with 30% of your credit grade, which is credit utilization. It shows you exactly how much you need to pay off and by which date to gain the most points the fastest. So if you're trying to build credit faster, you're going to want some of these benefits. And if that wasn't enough, Credit Smart also includes $1 million worth of identity fraud insurance for your entire household, which is free with your membership. And finally, it has a money manager that allows you to connect your checking and your savings accounts, including your investment accounts, your credit cards, and more, so that you can manage all of your finances right from their dashboard. And remember, guys, it's one thing to add points to your credit, it's another thing to protect and maintain it. Smart Credit helps you with both. Try Smart Credit. It only takes 1 minute to enroll, and you get to try it 7 days for just $1 using the link in my description. All right, guys, now back to this video. All right. What about interest paid on business credit? This is an important thing to know, guys. Even through business credit, it is not considered taxable income, the interest paid on the business credit. It's generally tax deductible. So no, you won't be taxed on your business credit, but yes, you should be able to receive a tax deduction for the interest that you paid on your business credit. The reason why the IRS allows you to deduct business credit interest payments is because it views this type of interest as an ordinary and necessary business expense. This essentially means that the IRS views business credit interest payments as a legitimate business expense in the same way that it might view inventory purchases, rent payments, or even consultation fees as a legitimate business expense. So whether you paid $100 or $10,000 worth of interest on your business credit cards during the year, then don't worry, it's still tax deductible as a business owner. Now, can you deduct the principal? Now that you know you can deduct the interest you pay on your business credit, you might be wondering, can I get to deduct the principal I repay too? And the answer is yes. Of course, any business expenses that you make in the course of doing business are going to be tax deductible as long as those expenses abide by Code Section 162A. If they're ordinary, necessary, and reasonable to the business owner in the pursuit of income, we are able to deduct those expenses, including the interest that we're paying on top of the principal. Now, what about rewards? Some business credit cards, for example, may give you business credit rewards. These rewards can include cash back, points, miles, and many more. You can earn these rewards as you use your business credit card over time. Business credit card rewards are not subject to taxes, so you won't have to pay taxes on all of that cash back you get from swiping your business credit card. The reason why business credit card rewards are not taxable is because the IRS considers them to be a rebate on spending and not as actual income. So this is great for all of you business owners who have business credit cards and are earning massive rewards. What about business lines of credit? With business lines of credit, there are another type of credit that many business owners use in addition to business credit cards and traditional business loans such as SBA loans. The tax rules for business lines of credit are very similar to the tax rules for other types of business credit. For example, the IRS does not consider a business line of credit to be income. Therefore, you generally won't have to pay taxes on it. However, there is one circumstance in which you could possibly owe taxes on this type of business credit, and that would be if you fail to repay some of the money back to the creditor and if the creditor forgives a portion of the balance. In this circumstance, you would likely require to pay taxes on the amount of money that the creditor let you borrow and then allowed you to not repay. Let's just say that you got into a $50,000 business line of credit from a lender, that you used all of it and you repaid $30,000, but were struggling to repay the other $20,000. If you did a debt settlement with the lender and they agreed to forgive the remaining $20,000, you could still owe taxes on that amount. And this is because the IRS would not see this as business credit anymore. So this is something to watch out for. You're dealing with a situation like this, and you should definitely speak with a tax expert to find out what kind of tax liabilities you could have on the funds that you owed, but the lender forgave. Now, in this situation, you would still be able to deduct the interest payments that you made on that $30,000 that you did repay, just like you could for loans and business credit cards. When it comes to business lines of credit, guys, another thing that you just need to be aware of is that if you try to use business lines of credit to get cash for personal expenses, then this could potentially cancel any deductions you would get for paying interest. And this is something that most people are unaware of. So make sure that you never try to take a business credit line and use it for personal expenses and then try to deduct the interest as business expenses. That way, if the IRS comes ever knocking, you'll be able to prove that all of the credit that you used for your line of credit was a legitimate business expense. Now, as a general rule of thumb, you should never try to commingle business and personal expenses. This can get you a lot of trouble. We've talked about this tons of times on this channel. So make sure that you use your business line of credit for business reasons. Now, what about receiving double deductions? We've already gone over how you can get deductions for paying back interest on business credit. But now let's talk about how you can get double deductions for your business credit. One way that you can do this is by using business credit to purchase equipment for your business. When you use business credit to purchase equipment for your business, you will not only be able to deduct the interest that you pay when you're repaying the credit, but you'll also be able to deduct the depreciation expense during the useful life of the equipment. Depreciation is when the value of an item goes down over time due to wear and tear. We talk about this all the time on my channel. Many different types of business equipment can experience depreciation, such as like computers, tractors, machinery, various different tools. They can all experience a wear and tear and see a drop in value over time as a result. So if you need to purchase equipment for your business, you would be able to get a second deduction if you're using business credit because you're deducting the interest on the credit, plus you're deducting the expense, plus the credit card company is then partnering with you by giving you points because you borrowed credit from them. Guys, this doesn't mean that you have to go down this route, but this is an option why many business owners decide to use credit. It's because there's more leverage. Now, by doing this, you'll be able to deploy more business credit to other vital aspects of your business, such as buying property, buying inventory, and this can help you grow. But is it necessary to use business credit? Is it necessary to use it to buy equipment or even in your business? No, it's definitely not necessary to use business credit to buy equipment for your business. However, many business owners choose to use business credit to buy equipment for their companies. There are a number of reasons why they choose to do this. The most important reason is because they might not be able to properly afford the equipment with just stored away cash. For example, let's just say a man is opening up a brand new pizza restaurant and he wants to sell some pizzas. He may need to install a brick oven for $30,000. If he doesn't have the full $30,000 in cash, then he might use business credit to finance the purchase of the oven. Now, another reason why a person might finance equipment purchases for their business is to take advantage of the credit card rewards. I told you guys before, a business owner might be able to get a substantial amount of miles, points, or cash back if they make large equipment purchases with their business credit card. And finally, a third reason why a person might use business credit for purchasing equipment is so that they can build business credit. Making consistent payments on money owed can help to establish business credit and raise a company's business credit score. Having a good business credit score can help you acquire more business credit and establish a better credit worthiness. Many business owners depend on having access to a large amount of business credit, so having a good business credit score can be crucial for these companies. Even if your business doesn't necessarily need access to a large loan or a business credit with a high credit limit now, you never know when things might change in the future. So it can be beneficial for many different types of businesses to just have a good business credit. But how else can you improve your business credit score? I mean, besides making consistent payments or, not having business debt too much, right? There are a number of other things that you can do to actually improve your business credit score. Now, let's go over them. For example, keeping just a low credit utilization ratio is one of the most important ways. Just like with personal credit scores, your credit utilization ratio can have a major impact on your ability to build your credit score faster on the business side. It is recommended to keep your credit utilization ratio below 30%. This means that you don't use more than 30% of your available business credit. So for example, if I have $100,000 in available business credit, that would be $30,000 of credit on a regular basis that I'm using. If you use more than this amount, it could be something that could drop your business credit score, but maybe only temporarily. It can be tempting for a lot of business owners to try to push past that 30% mark, and sometimes you need to. But if you are going to push past that 30% mark, make sure that you're paying off your credit card in full. Another thing that you can do to improve your business credit score is to just check your credit score frequently and make sure that all of the files of your information are accurate. Sometimes mistakes are made during the credit reporting process, and this can end up hurting you because you find out that you entered your EIN number wrong. This happens all the time. If you haven't done so already, you should check your business credit files to make sure that they are accurate and that your business credit scores have not been lowered by mistake. If you notice some mistakes in your credit report, then you can inform the credit bureau, and hopefully this will lead to your score going up. Now, finally, one last thing that you can do to raise your business credit score is to establish credit accounts with your suppliers and vendors and ask them to report your payments to the credit bureaus. Some vendors and suppliers will automatically do this. A majority do, but not all of them do. If your vendors or suppliers will not report your payments to the credit bureaus, then most likely you should probably consider switching. This is because you make consistent payments to these vendors and suppliers, and you want to consistently build your business credit at the same time. Now, one thing we have to cover is the income that you generate with the business credit, taxable income. Some people get confused about this, so I'm just making sure I cover the basis. They wonder if the profits is considered taxable business income or if it is non-taxable because it came as a direct result of business credit, which is non-taxable. So let me paint the picture. Let's just say, for example, that you operate a coffee shop and you want to buy a food truck that you can use to sell coffee and sell pastries. So let's just say that the truck costs $75,000 and that you buy the entire thing using business credit. In this circumstance, you would not have to pay taxes on the $75,000 in business credit that you used to buy the truck. However, let's say that your food truck generated an additional $100,000 in revenue in the first year. Even though you used non-taxable business credit to buy the truck, the $100,000 that you generated in revenue with the truck, guys, this is taxable income to you. And this is because the IRS considers business income to be income received from the sale of products or services. So if you make money by selling coffee or selling pastries with your food truck, then this would definitely count as income received from the sale of products or services, and therefore you would owe taxes on it. Now, what is the best type of business credit to have? Now that we've gone over all the key tax information as it pertains to business credit, let's just quickly cover some of the other business credit information. One thing that many business owners commonly wonder is, what is the best type of business credit? Typically they have to choose between business loans, business credit cards, business lines of credit. So there are pros and cons to all of these different credit types. For example, business credit cards tend to have significantly higher rates than business loans. In fact, it is common for interest rates for business credit cards to range from 14 to 22%. Sometimes the interest rates are even higher than this. You see, interest rates for business loans from banks usually range from 4 to 9.5%. So if your goal is to just obtain the lowest possible interest rate for your business credit, then in most cases, you will be better off with a business loan compared to a business credit card. So if your goal is to obtain the lowest possible interest rate for your business credit, then in most cases, you will be better off with a business loan compared to a business credit card. However, if your goal is to be able to get access to rewards like points, cashback, miles, then a business credit card is definitely the way to go. When it comes to business lines of credit, they can also have interest rates that are lower than business credit card interest rates. However, sometimes business lines of credit have interest rates that are actually higher than a lot of business credit cards. So whether or not this is a good option for you depends heavily on the specific interest rates on the line of credit that you're pulling from. It is important to note that many lenders require higher credit scores in order to be approved for a business line of credit. So generally speaking, business lines of credit usually come after you've already had a business credit card for some time. Some business owners also choose to have multiple sources of business credit. This is an option for you too. For example, you can have a business credit card and use it periodically to get rewards. However, if you need a larger amount of business credit for a major business expense, you can consider applying for a business loan to have a lower interest rate. Well, we have made it all the way to the end of this video, guys. Congrats on making it this far. When you walk away from this video, here's the key information I want you to have. Number one, business credit does not equal taxable business income. So no, you're not going to be taxed on your loan proceeds. Number 2, interest for business credit is tax deductible. So don't forget to claim the interest you pay on business credit as a deductible expense on your tax returns. And finally, number 3, rewards on business credits are also generally not considered to be taxable income. And this is because the IRS considers rewards to be a rebate on spending and not income. This is a nice advantage of rewards and can make it very enticing for you to establish a business credit card to start building your business credit and receiving bonuses. Don't forget to try Smart Credit by using my link below. If you have any questions about business credit and taxes, then feel free to get in touch with my team by clicking on the links in the description below this video. You can also check out my Tax Alchemy course, which is linked to the description below as well. You see, in this course, I go over the top strategies that are used by the wealthiest of Americans to save the most amount of money on taxes legally possible. And this does revolve around utilizing real estate as that main means of investments. There's a ton of valuable information included in this course. It's definitely something that you don't want to miss. So make sure that you check it out on your way out. All right, guys, that's it for today's video. I hope you enjoyed this video and I will see you guys on the next one. Cheers.